All right, hello everyone. So we'll just go over the ES and crude. So you should be able to see these charts very easily. It's the daily, then the hourly, and then the 5 minute. So I'm keeping it really simple. The other things that I'm doing is I'm seeing how the market behaves at pivots, basically support and resistance pivot points. And how it creates springs and upthrust. And because when I started doing this, I realized how many shakeouts there are, and those shakeouts, or what is the other word? I guess you call it stop run or washouts or whatever. They are customary before a move. Again, they are customary before a move. They also resolve, quote unquote, resolve a trading range prior to the next rally. So you have to see them and be aware of them and see when and where they occurred, so you have a pretty good idea whether the market's going to rally or not, because that's what happens. And I'll just give an example on the daily. You see, the one of the washout maneuvers is in an uptrend, is it will upthrust, then it will spring, and then it will rally. Again, in an uptrend, it upthrusts, then springs, then rallies. And in a downtrend, obviously, it springs in a downtrend, then it upthrusts, and then it rallies down, bear rally. So anyway, let's just give examples. So as you can see, it upthrusts on the daily, upthrust, then springs, and then creates the high, puts it back into an upthrust position, then pulls back. This time it didn't spring, and it created the high, but it's back into an upthrust position unless it rallies. So they constantly test the edges of the trading range, springing and upthrusting until eventually it just makes a new high or a new low. And this, I wasn't really able to see this as clearly as I am now, because of just some indications I put there. So very valuable, by the way, to see this, because this is where the boundaries of the range and the prior lows and highs are being tested, and this is where you want to look for trades. Anyway, so let's just take a look at what happened today. So the market, it does this, it springs, then it goes into upthrust, then it springs again, and then it rallies. All right, you want to see that upthrust, and then a spring, and then a rally. So first the upthrust, second the spring, then the rally. This isn't really a pattern, it's just a way of creating liquidity. All right, and setting up the accumulation. And by accumulation, I mean that on the spring, on the pullback that creates a spring, what they're doing is they're getting as much stops and whatever they can get in order to go up. So there's just a hell of a lot of buying at that when the market pulls back. All right, and they'll keep on doing that, But first step is to upthrust. Why? Because once that upthrust, which makes a slightly higher high, occurs, there are stops and there is liquidity under the prior low, and that needs to get collected. So then it'll go down, take everything, and then go up. So this is just an example of what happened. This was there were a number of trades. This is too early in the morning. This is still early in the morning, and then finally in the morning at 8:30, 8:30 to 9, a little after 9, you had this buying wave. So you have this buying wave, this very clear, and the market pulls back, tests, and makes the higher high. Bingo. All right, now let me just say this is a little bit challenging to trade, because this was news, so it's a little bit challenging to trade. Why? There's a key daily level up here. So the sellers stepped in and they sold with very heavy pressure. So you don't really know if this is going to take out this low or not, right? So this is like, what do I do? That type of situation. So because you have heavy buying and you have heavy selling here on the 43. So 49 on the buying, 43 on the selling. And that is why when it pulled back and retested the high, the sellers are still there and it went all the way to the low. And that's where the original buyers, the demand zone, whatever, they come in and they say, all right, let's step in, because the sellers already got their move. They're exhausted. Let's step in. How do you know? You really don't know. You don't know, but you know that the buyers are here and they will defend. Here, they're there, and the sellers were there. So the sellers retested and brought it down, retested the buyers. They came in and rallied. The other thing to note is that you can see the situation that you're in. Up thrust, spring. What happens after that? It's going to be an attempt at a high, because both sides of the range have been tested. Right? So now let's go to the crude. Also had one trade. Again, this is not a big move, because of the month we're in. It's not a big move, but it is a move. And I'll show you here. At this level, right, market goes up, and here's how I knew that's it. It's going to fall back, but I didn't know how low. I thought maybe it could take out these lows, but it didn't. All right. What happened was, as it tries to crack through, look at this. This is the biggest down bar in 100 down bars plus, and almost 100 down bars. This is the biggest down bar. On the breakout attempt, you had this. This is rejection. What this means is the market's going to go lower for sure, because they're not accepting the breakout. The attempted breakout met heavy selling and pressure. Selling pressure is there, and they will attempt to take the market lower. Now here's the thing. How much lower? We don't have a clue. All we know is that when it comes to support levels, we just have to kind of check to see if demand is there or not. You don't have a clue. Typically it will target some low. So I thought it was going to at least target this low, like in this area, these lows, but it didn't. And that means that, those buyers are actually buying that pullback. All right. So, but this was a trade, meaning this is where you could sell resistance all the way back down, but you just have to kind of like get the hell out and know when to get out, or have like, static targets to take at least partial profit. Because this is a pretty big move. You have a break, you have a test of it with the entry, and you have, so you want to be out at least half your position or 1/3 of the position, just dynamically. If you're targeting lows, then it didn't work, because it didn't break any lows. Why? Because this is a valid breakout. And there's one very important point to note here. Here, we're in a rotation back up. You see on the daily where the market turned right here? The market turned, right? This turn has a bullish change of behavior. Now, obviously, it looks like it's going to just turn and pull back and make a minor pullback trend, meaning it's a pullback on the daily, but on the hourly, it's going to look like a trend, right? But you have a very clear case of a change of behavior, which is turning the daily chart, and it's very visible. Look at this. This wave is the biggest wave in 27 waves. 27 waves coming from, well, what do you know? A spring. So yes, this is a spring in a downtrend, no question, right? This is spring in a downtrend. The market is a downtrend, and it's ready to rotate back up. It hits a spring, meaning it's attempted to go lower, break down lower. That breakdown is bought. Bingo. They take it up here, and you have the biggest up wave in 27 waves. Pulls back, breaks out. Okay, so where the hell is it going to go? I don't know, but it got rejected right here in the former in the prior breakout. I do consider this a change of behavior, but this is the change of behavior that's part of an hourly trend, which will set up the daily bear pullback. So where is it going to go? I don't know. All I know is that the price is going higher. It might do another spring here of this low. But you know, it's on an uptrend in the hourly, but a downtrend in the daily, and setting up a pullback, a bear pullback on the daily. And that's about it. So I already did the study where I showed you how springs are used to set up upthrust, which then do the breakdown, right? So I showed you all how that's done. So here, for example, you hit the spring, you hit the upthrust, and then you break the market. That's one. Hit the spring, hit the upthrust, break the market. Hit the spring, hit the upthrust, break the market. By break the market, I mean lower lows. Hit the spring, hit the upthrust, break the market. Hit the spring, hit the upthrust, break the market. That's like 4 or 5 in a row. This is what happens in markets. So why do they do the spring first? Because when they make that lower low, you have liquidity above or stops above the prior high. Why? When they make the lower low, you have new sellers. New sellers that step in on the lower low and short will have stops above the prior high. Existing sellers will move the stops to the prior high when the market makes that lower low. So both the new sellers and existing sellers will have their stops above the prior high, which makes it a target. Why is it a target? Because those stops can be accumulated, meaning it's a form of distribution where I just have to bring the market up to collect those stops, and since those stops I can sell and take the other side, because those are buy stops, right? Because of the short position that was taken on a slightly lower low, the stops are buy stops. So what I do is take price up and sell, take the counter. So sell and just take those buy stops. Those buy stops will meet my selling, which will allow me to create a distribute, create a position, and then bring the market to lower low. And the whole game goes on again and again. So it's just what this really is a form of accumulation and distribution. That's all it is. Upthrusts are a form of distribution. Springs are a form of accumulation. You do not need an entire range and waiting all that time to do accumulation when there's a bunch of stops below a low, and you do not need to waste all that time doing distribution when there's one point where there are all those stops. You just have to take it above, collect, establish the position, and then bring the market down. It's the quickest way to do accumulation and distribution is to target lows and highs via springs and upthrusts. It's a very, very important point to mention, because otherwise, strong hands, they would have to keep a range. And a range obviously has multiple bars. And, within a day trading setting, you're wasting a lot of time. That time can be used to make lower lows after an upthrust or higher highs after spring. Anyway, so that's what's going on here. So what am I looking for next? So this area got taken already, right? So we'll just put it over here. What the hell? Right? So this low, that high. So we're going to see how this range plays out. I don't know yet, but this is in jeopardy right here. The 70.23. You did the upthrust, right? Which means where are the stops? You tell me if you're following what I'm saying, where are the stops now after this? They're here. The stops are there. Why are the stops there? Because traders will have their entry above this area, 71.29. So because it's 71.29, they're in the market on this green bar. They're in the market, and earlier buyers, some of them would have moved their stops here. Okay, because of this higher high, you have a lot of stops here. So what do you think is going to happen if this thing doesn't go? If they don't have enough accumulation, why not take it down and accumulate these stops, right? So remember, in an uptrend, you have the upthrust to the spring. That spring is right there. 70.23. We'll see when it hits and how the market behaves there. And I mean, what I'm showing here literally is not even, if you really understand what I'm showing here, you understand that this is not even a rocket science methodology. You know, Wyckoff has there's a lot to it, but this literally is nothing more than buy low, sell high. That really is what's going on here. Buy low, sell high. This is a low. That's a high. You're going to look to buy the low and then take it up. So it's just this is the closest thing to buy low, sell high there is. What I'm explaining here is the closest thing, and is taking buy low, sell high and really making it actionable as I'm explaining. Anyway, take care. Have a good weekend. Bye.